Hello and welcome back to DukascopyTv. Joining me in the studio today is Guillaume Taylor, and we'll be discussing the link between finance and philanthropy. Guillaume, thank you so much for coming into the studio once again.
Hello, Monica.
Until recently, these two disciplines have been quite separate and distinct. What's changed that's made them sort of merge a little bit?
So, from the philanthropic side, it's a desire to maybe be more efficient, and there's also a question of capital constraint. There isn't that much money in philanthropy. On the private investment capital side, it's the realization that for a long time natural resources have been cheap and plentiful. The growth in demographics has made it possible to sell the products and services easily. And so we have to rethink business models, we have to rethink collaboration. And so it's no longer a vertical world, a vertical process, is mostly a horizontal process. So the philanthropic movement that's acting as an incubator wants to learn from capital markets. Capital markets that's acting as an accelerator also wants to be able to achieve the social and environmental objectives of philanthropy.
How much value does impact investing have in the financial sector today, do you think?
I'm not sure of the figures, but if you take, it's not very large, but if you take carbon trading, renewable energy, and clean technology outside of the equation, it's really a drop in the bucket. The problem is also we haven't defined exactly what impact investing means. And so what is the impact investing universe? It depends from place to place. So, but it's a growing business. It's still marginal right now within the financial industry, but it's growing, and it will grow a lot in the short term, I think.
Do you think the importance has increased as the world wakes up and realizes we're in a resource-constrained environment these days? Definitely.
So there's an awareness, but that awareness hasn't translated in practice. So we still have the same risk perceptions, risk averseness. We still look at the same economic indicators, and we react the same way to the same economic indicators. We use the same benchmarks. And so it takes a long time to go from theory to practice. But the awareness is there. So it's a question of time before practice takes on.
But in your opinion, is impact investment available in all asset classes?
Oh, yes, most definitely. We can apply the impact investing methodology or approach from cash management all the way to equities, going through real estate, public commodities, debt. So impact investing is really about creating a dynamic relationship between the investor and the investee, and making the relationship more efficient and making the flow of capital from investor to investee much more efficient. So it can be done in all asset classes, without a doubt.
But it's not just about doing the right thing, is it? I mean, impact investment can provide a superior market return. Do you agree with this?
I fully agree with it. So impact investing is really about creating this link, as I mentioned before, an efficient link between the investor and the company, and making sure that we are aligned in the objectives. The objectives have to be aligned, otherwise it's not going to work. So if that relationship is good and it's efficient, in the long run, the company will make more money, it will be more viable financially and more sustainable. So to me, intuitively it makes sense that impact investing is about greater returns in the long term. But there's no empirical data to prove that just yet, but in due time I'm sure it will be there.
It does sound very positive, but what are the constraints as well?
I think the constraints are a question of time and understanding intangibles. Financiers usually work with numbers. They understand business plans, they understand quantitative issues, they understand numbers. Globalization has brought an interdependency and an interconnection between all domains. And understanding that is very abstract. And so we have to step out of the number crunching and the quantitative aspects, and we have to understand these abstract issues. But these abstract issues are very important. And I think so the mindset and thinking out of the box is the major constraint. But time, I think, is really the issue. We don't give time for businesses and projects to prosper.
Okay. And finally, what is your outlook for the growth of impact investment?
Everybody's talking about impact investing. Foundations are talking about mission-related investing, so I think it will grow. There's no question about it. There's a huge demand, but I hope it grows slowly. If we take the lessons from microfinance, where after the financial crisis in 2008, there was a massive inflow of capital in a very short time frame into microfinance industry, and it destabilized the whole process. So I think this growth has to be slow. But today, impact investing is really about the flow of capital from the north to the south. So financing companies that are providing services and products to people at the base of the pyramid. But companies like Quadia are looking at impact investing in Europe, in developed markets. And so there the opportunities are huge. And I think there will be a massive inflow of capital at that time when we realize that the way we're investing in certain sectors we're investing in Europe are creating huge amounts of social environmental added value. So the opportunities are quite big. Yes.
Sounds very exciting, Guillaume. I obviously look forward to seeing what the progression is in the time to come. But thank you for your time today.
Thank you, Monica.
Thank you. Now that's all from Guillaume and myself for the moment, but click back to Dukascopy for interviews and updates throughout the day. Bye for now.